Welcome everyone to our webinar today on SME lending. My name is Michael Harmer. I'm one of the directors here at FinCare. Chris Slack is going to be running the seminar with us today. Chris runs a business called the Finance Consultancy. He works on businesses and our clients in relation to commercial asset finance, business loans, and providing some working capital solutions. He's got over 20 years experience in the business, in the industry. He understands all businesses are different and all got their own unique challenges. He's actually worked on one of my clients where he provided some debtor finance facilities. We put those in place. The clients always had problems with cash flow issues. These facilities have made a big difference to the client and really alleviated some of those cash flow problems. So that was a great experience for the client and us working with Chris. So I'd just like to welcome Chris to the webinar.
Thanks, Michael. Much appreciated.
I thought I'd start off, Chris. We just had a webinar on for mortgage broking and some issues around that. If you could give us clarify the impact of the small business owners, the new loans for small business owners the government's come out with in the packages.
Sure. So probably important to cover off on one thing first in terms of, I suppose, for many of the mortgage holders, there's been talk about deferring payments, and there's some important points to sort of start on there. So if you defer loans for payments for your business loan, you have the same implication. So the payments are just capitalised at the end of term. They're not offered for everybody, so they're only meant to be for those in hardship. It's certainly not a holiday. It can affect your credits. It's not meant to affect your credit score if you defer a payment, but those non-payments are still going to be recorded. So it's different from a default, but it may affect a business's future borrowing. So it's just important to make sure, if we're deferring loans, it's important to be thinking about, well, okay, is this the right course of action? And like all things, people should be checking in with yourselves, Michael, as their accountants, just to make sure that there's every opportunity has been considered. So for that, just to your other point of your question, the government-backed bank loans, look, they are government-backed. There's meant to be a discounted interest rate along with that. There is certainly there is non-banks that are offering this as well, but there is a few things for clients to consider. The delays for these have been quite extensive so far. So the loans traditionally, the way they're set up, 10 to 250 grand, but they are fully assessed. So you still need to have had your taxes up to date, your last BAS. Even though for many people that March BAS isn't due for a little while, they still require it in most cases. It is a full assessment, so there's no ease up from the bank in that area. They're not meant to be used for refinances either. So for those people that are licking their chops at a cheaper interest rate and thinking, well, okay, we've got this expensive borrowing now, we can refinance. It's not really meant for that purpose as well. So they're available. We can certainly help clients out with them, but the time delays have been pretty expensive,